All right, so let us get this. We're going to go through some of the additional confluences, just bits and bobs, and then at the end, I'm going to have a really nice example with the previous week, using the previous week high combined with the Asia whipsaw daily cycle. And yeah, we'll just sort of go through how you can trade it using just like using logical steps, going step by step. But first, let's sort of go through some of the additional confluences that you've learned so far, how to use them, when it's applicable, stuff like this, and then we'll get into that nice example at the end. So again, let's just go through this a little bit so that we can increase the amount of repetition that you're doing. Obviously, you've got your build up, your inducement low, and then we've got channel, build up, inducement high, before building up, inducing Asia high, and now we are trading away from this. Obviously, we notice our vector candles here, vector candles here. We like them to accompany our inducements. Then we have our Asia high inducement. Then we have two possible POIs to pick from. You're not going to want to pick this one because this is just lying on liquidity. So we have two potential POIs to pick from, but which one's giving us, like, which one is more likely? We also know that we're already creating an EDM from here. So which one's more likely? Well, this one lies on Asia low. So this one has that additional confluence. And so in this case, this would be the one that you would want to pick. Also notice how on the M1, this will be equal highs. We played away from that, showed the liquidity, and now we obviously come in and you can see, okay, we've got our Asia low bounce, and then followed, we also have more EDMs that we can trade, of course. This one here is the one that we took due to the Asia low bounce, and then obviously you get a little bit sweaty hands during this, but this would be your break-even point, creation of a new low. And then again, you've got this EDM. If you want to play this really safe, you can take this like so with your stop loss up there, and then you can look to again target here. This is the only real liquidity target. When you look on the left, this really means nothing, this point means nothing, this is our equal low point, so this is the point that we really want to target. Obviously this will be a little bit scary, all of this, but again, we actually expect stuff like this at the liquidity because they want to give people more chances to get in, right? But all we see is, okay, build up, so channel, vectors, inducement down. I believe this was end of week as well, so maybe not actually, but it looks like it. Like this sort of reminds me of end of week. Oh no, it's not actually, it's not, never mind. Okay, next one. Again, this is what the day looks like. First, we have to understand why we could be looking for a retail heaven. So this is our H1 time frame. As we can see, we've had significant inducement high, and then right here we have again build up, inducement high away from this inducement and this inducement. So you can see every time we get an inducement high, we just trade away from it after our medium or medium inducement. Okay, so again, we've got inducement high, inducement high, inducement high. So we can begin to expect a potential retail heaven. So there we go. Remember the higher time frame inducements we have had, and where our main target is. So this would be your first target, like your intraday target, and then this would be your main target. Okay, so maybe we could look to the entry helper for additional confluence. So this is one of our additional confluences that we've spoke about, the Asia low bounce. What do we love that to combine with? EDM bounce with a M5 EDM with a potential retail heaven that we know from looking at the higher time frame right here. So we could be expecting something like this. And then of course we get our Asia low bounce. Realistically, if you're intraday, then this is probably the target that makes the most sense. So this is the target that we'll show. It's important to note that you're not always going to catch the entirety of the move, just TP where it makes sense. And if on, maybe you can leave like a runner intraday, but runner for like this. And then obviously you've got your EDMs. These are a big part of retail heaven, sort of keeping you out of these, keeping you out of taking these like shittier reversal trades, right? That all makes lots of sense. Next up, we've got the Asia midline additional confluence. Again, you can see lovely build up right before New York, London Open. We vector down into it. This POI lines up with Asia midline, and then as you can see, overall higher time frame liquidity is up here. We've had all of this. You can see we're sort of reacting from here. Oh yeah, it holds, it holds, it holds, it holds. Obviously, we are going to come through and wipe all of that out. Again, you can see the use of build-up inducement to the low side, potential mitigation. You probably partial here, overall target here. Probably take a break even on that one. But again, this one you're still holding. All right, perfect. So now we're going to get into a very, very interesting example. So looking at the H1, where is our most recent inducement? To the downside, right? So we have induced low, all of these equal lows. This is going to become our likely target, as this is also the previous week high. So as you can see, 20, 21, 22, 23, 24. So that's Monday and that is Friday. This day here is Monday. This day here is Tuesday. So this is the previous week high. So we know that this is a very strong liquidity point, and we're trading away from this medium inducement. Perfect. This is obviously H1 on Euro GBP on the 28th of June. Just wanted to throw in this example because it was very nice. All right, so let's go down to intraday. Intraday, where is our liquidity? We obviously have Asia low with the equal lows, Asia high with the relative equal highs, and then we also need to be careful of previous week highs. So we need to keep this in mind and remember to look to the left. We've also got the previous day low down here. Perfect. So next, let's identify our buildups. So obviously this was one right here. And then coming out of Asia, we've got this little buildup right here, right above these equal lows. What could we expect? Okay. Again, this is a little point, but notice how they build relative equal highs before they come lower. It's very nice when price builds liquidity in the direction of your trade. So in the direction you want to take trade. So we've had a build up and now we've had an inducement as well. Also, this inducement was dead on Frankfurt Open. What time is Frankfurt Open? 8 a.m. UTC plus 2. Okay, so just looking at this, we don't necessarily have to trade it, but where could we expect price to go next? Well, we've taken our liquidity target to the downside with vector candles, so possibly Asia high could be our next target. So look, potentially Asia high, but there is no entry helper confluence, nor do we have a completed cycle. So obviously we'd love to get our mitigation like here, but as you can see, there's no mitigation. So this would be a more advanced trade, but we can cover it anyway. So when we go down into this, we see, okay, these were our vector candles. Then price pushes off, comes back down, mitigates our inducement before continuing in the intended direction towards our target. Now, what do you see? Sorry guys, it's 1 minute off. I hope you can excuse me and I hope you don't ask for refunds about that. But yeah, pretty damn close to the minute. Frankfurt Open, right? Okay, so of course, price does its thing. It collects its target. Now we have to think about something. What kind of daily cycle are we potentially looking at, given that we've got a whip low, a whip high? What could we be looking at? Asia whipsaw, right? So potentially we have whipped both sides of Asia early in the day. Asia whipsaw. Exactly. So now that we know, okay, we've whipped high, we've whipped low, we've whipped high, we've got a potential Asia whipsaw day, and we've built relative equal lows right here. So what could we be expecting? Do we expect this low to hold, or do we actually expect it to be taken out? And also, when you look below these equal lows, what do we have? Okay. Knowing that we've got Asia whipsaw, it's very likely that we're just going to whip this low and then go higher. So this potential mitigation right below it is fantastic. So let's go into that. Potential mitigation, maybe. Okay, now you see we've been tagged in. Again, bit of an advanced one. Trading Asia whipsaw, you have to be a bit advanced. You have to be a bit more confident. You can actually also, if you go and look at this day, I believe it's the 28th of June on EG. You can actually refine this down to M1 to get an even better entry, but like I said, don't want to be focusing on entries too much right now. So we've whipped low, we've whipped high, and now we've whipped low again with what? That's right, vector candles. So where could we expect price to go from here? Where would be our first target? Yeah, you have to at least partial here, especially on an Asia whipsaw day. So let's have a little look. Okay, so now we're in London Open. We've vectored to the high side. Potentially, this could be high of the day, but let's look at something. We have to wait and we have to remember, what did we point out at the beginning of the day? Remember this? This was the previous week high. And this is why you don't want to forget this, and you always want to keep this in mind and remember to look to the left, because when I bring price, we can see, oh, this London Open inducement actually made perfect equal highs with the previous week high. So do we expect this inducement, because it is an inducement, little minor inducement, but it's created equal highs, do we expect this inducement to come down and grab more liquidity, or should we be trading towards our equal highs? Here we have a potential mitigation. Again, you wouldn't take a trade off this. Why? It's too big. But what would confirm this mitigation even more? Timing, specifically MM1. So as you can see, this is MM1 to the minute. That's what this little line is. For you guys should have the timings indicator now, so you should be very familiar with this line. This is the line that we use to mark MM1, MM2, and London close. So yes, we do have the Asia whipsaw daily cycle. So we've whipped high, we've whipped low, we've whipped low, we've whipped high, we've whipped low again, and now we've whipped high. So potentially we could expect another whip low, but we also have to think about things logically. We've made equal highs with the previous week high. So everyone is going to be seeing this as, because the previous week high is seen as like a significant support / resistance level. So now that it's held and it's created equal highs, everyone's going to be looking to sell. And if they're not looking to sell, they're already in sells. Okay, so we have to understand the bigger picture and not just the intraday picture. We do need to look to the left as well to understand things. Okay, so why is this an SMT? Well, it lies on equal highs. As you can see, this is the M1 right here. That's the M1 SMT. We've also had like M1 BOS, so people are looking to sell. There you go. Perfect. So let's go to the next one. Now, this is a little bit tricky, and again, this is more advanced, but you can see that we get a perfect M5 let MM2 away from our completed downside cycle. Potentially, this is a trade that you could take. This is just it on the M1. So that's it on the M1. That's your M5 let. That's your M1 mitigation. Where would you take that to? Yeah, exactly. Just take it to the highs. So let's see what we get. Regardless of how many trades you're in or where you're in your trades, you have to close your trades at this point here. We've created equal highs with the previous week high. We've given an SMT reaction. We've built so much liquidity here. And then we vector through, even though it's not within timing, we vector through. So this has to be the point where you close all your trades. But again, remember, we've grabbed significant liquidity high. We've got an Asia whipsaw cycle, daily cycle. So what could we possibly expect? Where would our next target be? Possibly now we could expect our next whip low. All of this just becomes liquidity. This becomes smart money trap or FFS. And we know exactly what we should see. Boom. There we go. Remember, so we've whipped low. Like I said, all of this becomes liquidity. This becomes a smart money trap. Look at this right here. So this is like your order flow. 1, 2. Now, look, they come in, instant rejection. How many smart money traders do you think are getting FOMO over this rejection right here? Oh my God, look at all that momentum. Look at all that momentum. It's going to continue. New high highs, new high highs. Boom. Right? Now we've whipped the low. Perfect. But it's late in the day. We've got our London close mitigation within here, something within there. So what should we expect? Realistically, we should either take it out at a mitigation, even though you should probably expect this to be like an SMT, or just the imbalance fill. Personally, I'd always recommend like taking it out at the imbalance fill, because in cases like this, you don't know if it's going to come and fully mitigate, and you could see this as like a channel. And this is like the last point of liquidity, right? Be your like internal liquidity. So yeah, either one of these is fine. And then there you go. London close. So from here, it's best to aim for the imbalance fill. Okay, perfect. That was a lovely little example